In section 12-2, we're going to be talking about the withholding, so things that are withheld from your paychecks. So it's important to talk about payroll taxes. There's a variety of different taxes, payroll taxes being one of them. So these are the taxes that are taken out of your paycheck. Just like we have property taxes, sales tax, payroll taxes come out of your paycheck and can also be known as income tax. So when you first start a job, the first thing you're going to do is fill out something called a W-4. And that is where you confirm your withholding allowance. And this is a deduction from total earnings for each person that's legally supported by a taxpayer. So the more allowances or people that are supported by the taxpayer, the less that will be taken out of the paycheck. And all of these things are payroll deductions, which are things that are withheld from employees' gross earnings. So this is a W-4, and you'll have your basic information, name, social security number. Then you also state whether you're married or single, and that will determine the tax table that we will use. And you'll also determine how many allowances you have. So this is how many people are dependent on you. So one could be for yourself. Another one could be because this person is married. And then they could have 2 children for a total of 4, themselves, their spouse, and then 2 children. And this will affect how much is taken out of their paycheck. So we have here the table for a married person. They have 4 allowances, and they make $1,460. So we calculate how much to withhold for federal income tax by going down from the allowances over from $1,460 that they make. So $29 is going to be withheld from their paycheck. You'll notice the less allowances you have, the more that is withheld from the paycheck, because the federal government assumes the less people that you are responsible for, the less money that you'll need paycheck to paycheck to support those people. So more is taken out. Here is the tax table for a single person. You'll notice 4 allowances, $1,360. It is about double the amount that is withheld from taxes because they assume that you're a single person with less people to care for. Other things that are withheld from payroll is Social Security tax. And this is the federal government's what they use for old age, survivors, and disability insurance, also like a retirement plan. So the federal government requires you to contribute to this, and when you reach a certain age, you're able to use it. Same thing with Medicare tax. So this is the federal tax insurance, health insurance that you are required to pay into. So it's withheld from your pay. And then it is important to know that the more money you earn, you get into a different tax bracket. So you have to keep track of how much you've earned over the course of a year to determine what tax base you're in. So this would determine how much tax is calculated. So some other things that are options or voluntary deductions from earnings would be retirement plans. So Social Security is a required retirement plan that the federal government requires everyone to pay into. 401k is an optional amount that could be put in if an employer has a 401k. Same thing with an individual retirement plan. So these are optional things that you can withhold money from your paycheck to contribute to these retirement plans. A Roth IRA is a retirement plan that you contribute to after you've received your paycheck. You can put money into this retirement fund. So the money put into the retirement fund has already been taxed because you've received the money, it's in your checking account. Then you put it into this Roth IRA. So when you withdraw the amount, when you're retirement age, it's tax-free. So that is all of the options. So some are required and some are voluntary that could be withdrawn from your paycheck.